Hi, morning all. This is Prashant. So, Sri Pragna CMA Academy, exclusively for CMA. So, I am here to deal with GST, goods and service tax. So, before going to discuss the GST, so first of all, we will learn what is meant by a tax. So, what is meant by tax, sir? A tax is a compulsory fee. A tax is a compulsory fee levied by the government, levied by the government for its subjects. Tax is a compulsory fee levied by the government for its subjects. Sir, actually, what are the subjects of the government, sir? The subjects of the governments are like to provide infrastructure facility to public, like constructing dams, roads, right, maintaining drainage system, proper drainage system, and to provide health services and education, free education services, to provide subsidy food supplies to the public, scholarship, etc. So for this, these are the subjects of the government. So in order to provide this subject, the government requires a revenue. The government gets its revenue through taxes. Government will get the revenue to taxes in order to facilitate all these subjects of the government. So they may be called as subjects or objects of the government. Right? So in India, obviously, we are following a federal structure of governance. Federal structure of governance. In federal structure of governments, we have three types of multi-layer of governances. So, like when you get into the USA, we'll have unitary structure, and coming to the India, we are following federal structure of governance. Coming to the federal structure of governance, we have a central government, state government, and a local body governance. Local governance. So, Article 245 of Constitution strictly prohibits arbitrary collection of taxes. Arbitrary collection of taxes, that which means the taxes must be collected, the taxes must be levied and collected only by an authority, only by an authority of law. So Article 245 of the Constitution provides that prohibits the arbitrary collection of taxes. Sir, arbitrary collection of taxes means initially we have Jamindari system, Raitwar system, where the taxes will be collected by head of the village or state. But coming to the after enforcement of the Constitution, so it has been provided a clause called Article 245, which says that so there will be no there exists the prohibition of arbitrary collection of taxes. That is, will be taxes will be levied and collected only by an authority of law. So who is the authority of law in India to collect the taxes, sir? Means so these are the authority of law, like central government, state government, and local body, municipalities. Municipal tax used to collect, municipalities used to collect municipal taxes, right? These are the authority of law to collect, to levy and collect the taxes in India, right? Coming to the types of taxes in India, basically we have two types of taxes. One is direct taxes, and another one is indirect taxes. India, we have two types of taxes. One is direct taxes, and other one is indirect taxes. So there is no precise definition for what is meant by direct tax or what is meant by an indirect tax. But by making some distinction between differences between direct taxes and indirect tax, we can able to understand what is meant by a direct tax and what is meant by an indirect tax. So before getting into the discussion, so let us first revise what is meant by a tax. A tax is a compulsory fee levied by the government for its subject. So actually I'm having a doubt, sir. So where the taxes collected by the government will be gone, sir? So government collects जैसे taxes అనేవి ఎక్కడికి వెళ్తాయి, sir? So the taxes which are collected by the government will be transferred to an account called Consolidated Fund of India. Consolidated Fund of India, CFI. So all the tax revenue. So usually central government will have major revenues from three areas. One is through direct taxes, and the other source of revenue is registration fee, penalties, and fines. So these are the three major source of revenue for the central government, through direct taxes, through indirect taxes, and through registration fee, penalties, and fines. So the direct taxes like income tax used to contribute 48% of approx 48% of total revenue for the government, and registration used to contribute 2%, and indirect taxes used to contribute 50%. Direct taxes like GST, customs used to contribute 50% of revenue to the central government. So the central government will get the revenue from direct taxes, and registration fee, penalties, and fines. So all this money will be transferred to an account called credited to an account called Consolidated Fund of India. So which will be managed by the and under the control of President of India. And usually similarly the state government collect the taxes will be transferred to an account called State Consolidated Fund. State Consolidated Fund. The tax revenue which are been collected by the state government will be transferred to an account called State Consolidated Fund. Okay, it will be under the control of governor of the state. Fine, sir. Okay, sir. Next we will discuss differences between direct taxes and indirect tax. So we have, as earlier topic we have been discussed, taxes are of in India taxes are of two types. One is direct taxes and one is indirect taxes. So direct tax. So direct taxes is levied directly on the person and paid to the government by such person. And coming to the indirect tax, it is levied on one person, and tax shall be paid by another person. So direct taxes are levied directly on the person, and such person only used to pay the tax to the government. So indirect taxes are levied on one person, and the tax will be collected from another person. So it is called as it is in a progressive nature. Direct taxes are progressive nature taxes. So it is based on the principle of ability to pay. Progressive nature means it is based on the principle of ability to pay. So indirect taxes are regressive in nature. Sir, what is meant by progressive and what is meant by regressive, sir? So coming to the progressive nature means nothing but right, as your income increases, your payment of tax will be also get increased similarly, right? So progressive nature means as your income increases, your tax liability will also get increased. Where coming to the regressive nature, it is also called as a steady nature. So irrespective of what you have been paying, so how much of income you are earning, the rate of tax will not be changed. Rate of tax will be steady in nature. Where coming to the progressive nature direct taxes, as your income increases, the rate of payment of tax will also get increased. It is called as progressive nature. It is based on the principle of ability to pay. Where coming to the indirect taxes, it is a regressive in nature, or it is also called as steady nature of tax. So where the tax rate will not be get increased. So Here usually direct taxes are levied on income of a person, and indirect taxes are levied on goods and services. So direct taxes are levied on income of a person, indirect taxes are levied on goods and services. So example of direct taxes in India, we have income tax, wealth tax. Actually wealth tax has got abolished from its applicability, has got repealed from the applicability, but still we have income tax, right? And coming to the examples of indirect taxes, we have central excise duty, state excise duty, and VAT, value added tax, and CST, central sales tax, and entertainment tax, and so on. The list goes on. Service tax. So what is the nature of direct taxes? It is progressive in nature. What is the nature of indirect tax? It is regressive in nature. So direct taxes are levied on income of a person, indirect taxes are levied on goods and services. So coming to the direct taxes, it is levied directly on the person and paid by, and the tax paid by such person to the government itself. Where coming to the indirect tax, it is levied indirectly. So it is levied on one person and the tax burden will be on the another person. So it is called as there is no shifting of tax burden in case of shifting of tax burden in case of direct taxes. And coming to the indirect taxes, we can able to see there is a shifting of tax burden. Shifting of tax burden. So like example, for example, if you have purchased a product or a good, say for example a marker from a shop, or a pen or marker from a shop. So the pen cost around 10 rupees, and the shopkeeper used to have a profit of 3 rupees, and the shopkeeper used to pay tax on this pen around 2 rupees. So by adding all this we'll get 15 rupees. So the pen cost, the shopkeeper used to sell the pen for the cost incurred for the shopkeeper is 10 rupees, and he is having a profit of 3 rupees on it, and he used to pay taxes of 2 rupees, right, for sale price. Say for example the tax is VAT, so the total MRP or selling price, maximum retail price or selling price will be, final sale price will be 15 rupees. 15 rupees is the final price of the pen. In this 15 rupees itself, it is also included with a tax of 2 rupees. So the shopkeeper usually shift this payment of tax to the consumer or customer. So he collects from the customer, and this is called as a shifting of tax burden. The tax payment of 2 rupees should be paid by the shopkeeper, and the tax burden of 2 rupees has been shifted to the customer, ultimate customer. So in indirect taxes we can able to see what means there will be a shifting of tax burden. So these are the characteristics of direct taxes and indirect taxes. There is no precise definition for a direct tax or indirect tax, but by making some distinction between or by observing the characteristics between direct taxes and indirect taxes, we can able to understand what is a direct tax and what is an indirect tax. And so direct taxes and indirect taxes, and we'll able to see few other differences. So direct taxes usually paid to the government during the assessment year. So in income tax we have 2 years called previous year and assessment year. So the income earned during the previous year is liable to tax in the assessment year. We're coming to the indirect taxes. The tax is to be collected and paid at the time of sale or purchase of goods or a provision of services. Sale or purchase of goods or provision of services. So these are the few characteristics between direct taxes and indirect taxes. Next concept will be discussed regarding with features of indirect tax. Features of indirect tax. So the first feature of indirect taxes are the important source of revenue to the government. Important source of revenue to the government. As earlier we have been discussed, the indirect taxes will contribute around 51% of total tax revenue to the government, right? So it will acting as an important source of revenue to the government. And a second feature of indirect taxes are it is a tax on commodities and services. Indirect taxes are tax on commodities and services. So commodities are nothing but goods and services. So indirect taxes are levied on what, sir? Means like sale or purchase of goods and provision of services. It is a second feature of indirect tax. And the next feature of indirect taxes is, so indirect taxes, there is a shifting of tax burden in indirect taxes. So in indirect taxes we will able to see there is a shifting of tax burden. That is, the tax paid has to be paid by the shopkeeper has been shifted to the 2 rupees tax should be paid by the tax payer on sale of pen has been shifted to the consumer, right, or customer. So there is a shifting of tax burden. The tax payable by the shopkeeper has been shifted to the customer by inbuilt of the tax amount in the final price of the good. Inbuilt of the tax amount in the final price of the good. And the next feature of indirect taxes is there is no perception of direct pinch. There is no perception of direct pinch. In coming to the indirect taxes, so the taxpayer may not aware of how much amount of tax he is paying to the government. He is not aware of how much amount he is paying to the government as tax, because the tax amount has been included in the price of the good. So there is a minimization of tax evasion in case of indirect taxes. There is a minimization of tax evasion in case of indirect taxes. With this minimization of tax only, the government is getting the major source of revenue from the indirect taxes. And it is having a feature of inflationary. Indirect taxes having a feature of inflationary. So inflationary means as we know that so inflation nature, as we know, indirect taxes are levied on it is a commodity taxation. It is levied on goods and services. So when the indirect taxes are imposed on goods, and there will be a rise of tax rates on goods, which leads to overall all around prices of goods, which leads to inflationary. So let us deal with an example. For example, if the indirect taxes on petrol is a good, right? So if indirect taxes called GA, customs duty, and central excess duty on petrol. The rise of taxes on petrol will get to the rise in transportation cost, in return rise in prices of all goods, which leads to inflation. Inflation is nothing but rises of continuous rising of prices of all the goods. So indirect tax is having a feature of inflationary, and it promotes social welfare. Indirect taxes promote social welfare. Sir, what is meant by social welfare? How the tax will promote social welfare, sir? Ante, like for example, if there are sin goods, we call them as sin goods like tobacco, pan masala, and alcohol, liquor for human consumption. So by levying by levy of high tax rates, high tax rates on these following sin goods, so usually the rise of prices will lead to less consumption of these goods, less consumption of, so which promotes the health of the people and usually promotes the social welfare. So it is another feature of indirect tax. Today in India we have indirect tax called goods and service tax and customs duty or customs act. These are the only two taxes in India present. We have indirect taxes. Prior to the GST, in India we have taxes called central excise duty, state excise duty, value added tax, service tax, central sales tax, entertainment tax, and the list goes on. So around we have 23 plus taxes, indirect taxes in India. So the central excise duty will be levied by the central government, and state excise duty will be levied by the state government, and value added tax which is levied on sale or purchase of goods within the state, sale or purchase of goods within the state, and will be levied by the state government. And central excise duty and state excise duty will be levied on manufacturing of goods, and service tax will be levied on provision of services by central government. Central sales tax will be levied on sale or purchase of goods, between the states. VAT is levied on sale or purchase of goods within the state. Where coming to the central sales tax will be levied on sale or purchase of goods between the state, levied by the central government but collected and retained by the state government. The revenue will be collected and retained by the state government itself, but the levy will be done by the central government. So the entertainment tax will be levied on like theme parks, movie theaters, so and entertainment related circus. So all these will be levied on entertainment tax, will be levied by the state government. But all these taxes has been subsumed into on the motto of one nation for one tax. To a one tax called goods and service tax, which emerged on 1st July 2017. So thanking you all. So we'll continue in the next session.